Hello, you're welcome to Fininvest Nigeria. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 20 years. In the course of this video, I want to give us a step-by-step guide on how to carry out fundamental analysis of a company before you decide on whether to invest in the company or not. So in this case, we want to look at fundamental analysis of Vitafoam PLC. Fundamental analysis of Vitafoam PLC. We start with the revenue as indicated here. That's the company's turnover or sales, same thing as revenue. So in this case, there are two columns here. The column for first quarter 2026 and the other columns of first quarter 2025. So under the revenue here, the company made 31.669 billion naira in the first quarter of this particular year, 31.669 billion naira, as against 28.799 billion that was obtained in the first quarter of 2025. So you could discover that there is an increase in revenue from approximately 29 to 32 billion naira. So that one is okay. That particular increase is quite considerable and is giving us a positive signal that we should consider this company further. The next item here is the gross profit. The gross profit here actually is 11.032 billion, 11.032 billion as against 8.644 billion. That was on the price, the profits as at first quarter of last year, 2025. You discover that there's still an increase from approximately 9 billion to 11 billion naira. So the gross profit just simply means the revenue minus expenditures. That will give you the gross profit. We now come to the next item here is what is called the operating profit. The operating profit here is 7.360 billion, 7.6.360 billion as against 5.570 billion, in the year 2024. First quarter 2024, the amount was 5.570 billion. Then this particular first quarter 2026, the operating profits amounted to 7.360 billion naira. We now come to the profit before tax. The profit before tax. The profit before tax here, you discover that in the year 2025 first quarter, the value was on 4.470 billion. 4.470 billion. And then for this particular year, the first quarter of this year, 2026, the value indicated here is 6.929 billion. 6.929 billion. There's still an increment of around 4 billion to approximately 7 billion naira. That's giving us signals that this company actually is doing relatively okay as regards its fundamentals. Then we now go to the profit after tax. Profit after tax here, that's the profit minus the usual taxation. That will give you profit after tax. So the figure here is 4.582 billion naira for the first quarter of 2026, 4.582 billion for this particular quarter, and then the same quarter last year, it was on 2.981 billion naira. It's an increase from 2.981 billion to 4.582 billion naira. This company is doing quite well. We now come to the total comprehensive income. Total comprehensive income in this case is 3.764 billion as against 2.766 billion. 3.46 3.764 billion as against 2.766 billion. That is the increase in total comprehensive income. Now, the most important parameter here when it comes to company analysis is not even the big figures you're observing here, the billions in sales and the billions in operating profit and gross profit. No, these figures are very, very important actually. But the most important here is the earning per shares. All right. So in this case, the earning per share for last year was 2 naira 21 kobo. 2 naira 21 kobo, and the earning per share for this particular year, first quarter, is 3 naira 35 kobo. So there is an increase in earning per share from 2 naira 21 kobo up to 3 naira 31 kobo. And how do we calculate this earning per share? Is the company's earnings, divide by the number of shares outstanding. The company's earnings, divide by the number of shares outstanding. And now, this is the number of shares outstanding. It is 1.25 billion. That's the number of shares of the company that is outstanding. The total number of shares in this case is given as 1.25 billion naira. By the time you divide the profit, the profits here by the share outstanding, you are going to get this value, the earnings per share. The earnings per share. Now, we look at the market capitalization, which is given as 140 billion naira. So market cap essentially means the company's share price, which is 112 naira, multiplied by the number of shares outstanding. That will give you the market capitalization of the company. It simply means that if you have 140 billion naira, you can buy the whole of Vitafoam. That is the meaning of market capitalization. Okay, if you have 140 billion, you just go ahead, if possible, you buy the whole company. If you have 70 billion, you can go ahead and buy 50% of the company. You become, a majority shareholder in the company. That's the essence of market capitalization. We now come to what is called the equity. The equity here simply means the company's total asset minus its total liabilities. The company's total assets minus its total liabilities, that will give you the equity. So in this case, you discover that by the time you subtract the asset, you subtract the liability from the asset, you still have something remaining, which is what? Which is 30.7 billion naira. So the company is fundamentally strong. That means the company's balance sheet is okay, is strong, because of the level of equity this particular company, has. So you can even go ahead and divide this particular amount, by the share price, and that will give what is called the equity per share. In this case, I think it should be around 15 naira thereabout. So the company has equity. You can go ahead and calculate its equity per share, which shows that the company is solid, is fundamentally stable. So this particular section, this section is the balance sheet, section. And then I want to briefly highlight the cash flow statements here. In the cash flow section, we have a cash at hand, cash in the bank, and cash in fixed deposit. Everything amounted to 18.88 billion naira. 18.88 billion naira. It shows that the company is rich in cash. Some company may be profitable, but when you go to their cash flow, you may not see, you may come across either negative cash flow or very small amount of money in cash. But in this case, the company has as much as 18.88 billion in cash. This company is cash rich. Now compare this amount, this particular figure, by even its profit after tax. Look at it. The cash at hand is even more than what it has in profit after tax. It's even more than what it has, in comprehensive income. So this particular company has a very solid, cash management, and so the cash flow is quite encouraging. Is really, really encouraging. And so after considering all these parameters, the balance sheet, the cash flow statement, as well as the income statements here, I come to discover that this company, has solid fundamentals. You can invest in this company and go to sleep, all right, without getting worried. And all things being equal, you also look at the PE ratio here is 8.36. It means the price all over the earning. Now, this is the price, all right? Divide by this earning here. You will have a particular number, all right? Then multiply that number by 4. That means you are annualizing the PE rate, you are annualizing the earnings per share. All right. So the earning per share here is 3.35. That's for the first quarter. So assuming all things being equal, you have the second, third, and fourth quarter remaining. So by the time you multiply this 3.35 by 4, all right, you have a value, a purported expected value for the whole year. Now, divide the share price by that particular value for the whole year. All right, that will give you an earning per share of 8.36, which of course is still a single digit number, a single digit, value. That means that the company is relatively cheap. And so, although this particular video is for educational purpose, but if I were to buy personally, all right, this particular company has a buy recommendation. You can go ahead and buy this company because if this particular result continues into second, third, and fourth quarter, I'm telling you, the price here, if it does not double, it will you will have at least 50% in value. You have at least, if you invest ₦1,000,000, you are likely to get not less than 500,000 at the end of this year, all things being equal. That is, if this particular performance continues into the subsequent quarters. Please like this video, subscribe to this channel, and share this video to the people in your community so that I can reach out to as much as 1,000,000 Nigerians home and abroad with this message about investments in the stock market. Thanks for watching. You could also consider other related videos in my channel as well.